Hey, welcome back to Lunch of the Market. I couldn't resist watching David Pogue before we went live on CNBC, so I hope you don't mind a little late. All right, today Jim Cramer sent out a link to an article on thestreet.com where Jefferies did their top 4 energy picks for 2011. Among those names, we found an old favorite, Frontline, FRO. Turns out that Frontline is down about $13 from its 52-week high. It's kind of got shellacked. In fact, all the shippers kind of got shellacked. But Frontline, right, trades for just 11.16, right? That's the PE, which is fantastic because anywhere basically under 14, we feel comfortable with the valuation of the stock. Okay, they also pay a 4% dividend, so we might actually consider getting long the common stock of FRO in addition to what we bought, which is the January 2012 20 strike calls. Okay, they're already in the money by about $5. We paid about $6.30, which means we only paid about $1.30 for time value all the way out to January of 2012. So for a full year, we only paid $1.30 for time value. The rest of it is already in the money. So short of a complete, absolute, and total collapse of the stock, in which some way we'd find a way to repair it and just add other options to it to make it a profitable trade or at least cut the losses. Frontline, January 2012 20 strike calls, I like them. Also, staying with the energy sector, we like going overweight energy on this pullback in oil. Oil was trading, threatening $100 a barrel, pulled back significantly under 90, and we are starting to add to our energy position, which has been a favorite of ours for some time. Okay, so in addition to Frontline, Apache, APA, that stock is trading with a PE of 13 on a trailing basis and 10.38 on a forward basis. Really attractive valuations. Stock's trading around 116.5. So we got long the January 2012 105 strike calls. So you're in the money already by about $11. You are paying more for time value here in this name, mostly because the name is worth so much more than Frontline just on a dollar basis. You're going to get more expensive options when the price of the underlying equity is more. Okay, so you can actually get long for a fraction of the cost, right? So it costs about, looks like we paid $20.45, so about $2,045. That's nothing compared to the, right, you'd have to pay $11,600 for a round lot. So you get the same exposure, you're already in the money, and you have plenty of time. We like it that way. Apache only has a dividend of about 0.5%, and so you're not really giving up anything by doing it via the option as you are with Frontline, because with Frontline, you get a pretty nice dividend to hold the stock and wait around. Okay, this morning before Freeport McMoran bounced, ticker symbol FCX, we did sell a few more 99, 94 put spreads. If the stock breaks 100, we're going to look to add from the long side in addition to selling these spreads. It's been weak last few days, but it bounces usually at some point during the day. So on the way down, we'll keep looking to sell those 99, 94s. And if it breaks 100, especially materially to the downside, we would look to add some deep in the money calls, at a minimum some in the money call spreads. Okay, we do have right now some 69, 89 call spreads. We're way in the money. We're just waiting for the time value to get sucked out, and then the spreads will be worth the full, right, $2,000, $20 wide spread. So we're just waiting for that to happen. But if the stock broke 100, especially materially, we would look to add some more call spreads, probably some $5 wides, right? Which is what we did for Netflix today, right? Our trade that we told you that we're going to tell you about today on Twitter. Netflix 195, 200 call spreads, right? Completely in the money by close to $10 a share, right? So a nice big cushion. Options expiration is February 18th. We paid about $3.60 for them, which means the upside is $1.40. That's a pretty good rate of return right out to February 18th. So take a look at those, right? At expiration, the spread will be worth $5. You paid $3.60. You get the $1.40. Depending on your platform, at Trade Monster, we just get to let them expire into the close. They do the accounting on the other side and handle the position. We end up with the $5. So we like it that way. We also like Trade Monster that way. Don't forget, you can get your own Trade Monster account by going to Investor Education on our website, magnumopusfinancial.com. Click on Investor Tools. and then you're going to see the button for Trade Monster on the left-hand side there. Click on it. It'll take you right to the link. It'll let them know that you came from Magnum Opus Financial, and we appreciate that, and you will appreciate Trade Monster. All right, thanks for joining in again today. Don't forget, if you have a question, mention us on Twitter with the ticker symbol, and we'll throw you in our Lunch of the Market. Have a great day. Hope your trading post-options expiration is going as well as ours is. Have a great day. We'll see you tomorrow.